Welcome back. It's still Business Incorporated here on Channels Television. We'll head straight to the markets with Will Ebong. Will, tell me you have good news from the NGX.
Oh, well, no good news for the NGX. At intraday, though, we know that rebound we saw yesterday where, we saw companies like O&O coming up to prop the market up. We did think it will be sustained at intraday today, but no, investors are hungry for profits, and they went there today and clawed out the little we thought we could. But we don't know. The market, has
but I think for the week we might still see a positive, because I remember our first gain for the week was about 258 billion, and then the next one we lost like 5, and then yesterday's gain wasn't as much as 200,
but still a bit significant.
Yeah, so fingers crossed at the end of the week we'll still have some gains left.
Let's hope there'll be a reversal and the market tilt back to positive territory at the close of business.
Yeah.
So let's see the stocks we track at intraday. We see equities were mixed. Nigeria's NGX was slightly down at intraday by 0.15%, still at the 106,000 level. But we'll look at quickly in South Africa, the JSA there, we see it's up 0.92%. That's nearly 1% up. Elsewhere, Egypt's EGX was closed Thursday, but in the green. Let's look at that very quickly. 0.78% to close the week. And in Nairobi, Kenya, we see the stock exchange there closing 1.08% down for yesterday. Let's hope that at the close of business today, we'll see a positive turnaround for that equity. Now, before we proceed to other equities in other regions, let's shift our gaze now to the fixed income market in Nigeria. Bankole Odusanya, Chief Dealer, Treasury, Polaris Bank, joins us. Good afternoon, Bankole. There was a Treasury bills primary market auction on Wednesday, good afternoon, where we saw an uptick in stop rates. Now, give us a breakdown of that result.
Okay, so the lowest we had seen, in the quarter for the Nigerian Treasury bill stop rates was 17.8, which happened last week. So this week we saw an uptick to 18.3%. That is discount rate for the 1 year, which is the major benchmark we always discuss. What's happening is that we are seeing some reduced interest from FPIs on OMO instruments. System liquidity is also an issue because the central bank continues in its monetary policy stance of tightening. As we speak, the system liquidity is about a deficit of 800 billion. So basically, one other issue is that the DMO also is trying to issue another 800 billion Nigerian Treasury bills next week. That makes it 3 consecutive weeks of issuance of Nigerian Treasury bills in a system, with the system liquidity, which is already very tight. So basically, going forward, we expect yields to continue to inch up from that about 18.3 to closer around 19% discount rate. For OMO, we expect OMO bills to also inch up. Should there be OMO offer to mop up liquidity, that is going into the end of the month, we expect that OMO bills should also cross into closer to 20%, basically. So what's happening is that system liquidity and a little bit of reduced interest from FPIs in Nigerian OMO instruments are, deriving from what's happening in the US, where there's some fear, of some global economic crisis or market crash. We've seen that some people are simply just going back to cash, selling equities, selling fixed income securities, especially of sub-Saharan African sovereigns, to simply go back to cash. So we're seeing a bit of flight to safety here and there, and that's having some impact also on the FX rates. 2 weeks ago, we were beneath, 1,005 at 1,495. That's the EFEMS market. As we speak today, as I guess today, the rates were closer to 1,550. It's moderated down today. We've seen trades at 1,520 and 1,535 levels. But basically, the pressure and reduced interest from FPIs is what is playing out in the markets in the Nigerian space.
Okay, you mentioned the 3 consecutive auctions we've had right now. And looking at the calendar, if we can have that up there, the trend is that we have 2 auctions in a month. But now we're seeing 4 auctions for the month of March, which is quite unique. Why is that? And also, before you answer that, the minister did say that, the government is cutting domestic borrowing ratio by half from 80% to 40%. If that is the case, why do we see this ramp up in borrowing in the auction calendar?
Okay, for the first question, before rates inch back up, we believe the DMO is trying to conclude its borrowing for the first quarter. So we are currently at 18.3. It's cheaper to borrow at 18 compared to the 20% where Nigerian Treasury bills were in December. So that's one move. On the other hand, the third auction that I spoke to you about that will be happening next week, settlement 20th of March, is happening because the CBN, the DMO has reconsidered. Initially, from their first quarter offer calendar, they had tried to reduce offer of treasury bills by 800 billion, but they simply brought that back. We believe they are simply trying to front load their borrowing at the cheaper levels that we have, that is 18.3 discount. If rates go back to 20%, they'll be paying in excess of 20%. So that's the first question. For the other question that you asked about the Minister of Finance, yes, if you look at where crude oil price is presently trading at 70, it's beneath the oil price used for a benchmark in the Nigerian budget for 2025. The budget price for the crude oil benchmark was at $75 per barrel. International markets are trading at 70. In fact, it had got as low as $68 per barrel. So that deficit widens. Of course, going into the rest of the year in order to cover the budget deficit, the minister has explained that they will be borrowing more from the external markets. Of course, we expect rates to moderate, just as the US Fed are also planning to cut rates, just marginal reductions over there. But we wait to see how this plays out. So basically, that's what's happening on that end.
Okay, so you just talked about the external borrowing to, cover up the gap in the budget, the deficit we're seeing there. But latest data we have from DMO says that the CBN data says that Nigeria has spent so far $817.4 million to service debt just in the first 2 months of 2025. If this is already what we have currently, what do we see the government, how far do you see the government going in terms of borrowing and in terms of debt servicing? Isn't this just going to be, increasing the amounts that we currently have?
Yes. One factor is that we'll be having a bond maturity. Of course, that maturity reduces your external debt stock, and then they probably, simply just replace it to fund new projects and the deficit gap that we spoke about. Of course, on the side of DMO and Ministry of Finance, there's probably prospects to take revenues from crude oil exports from 1.5, 1.7 million barrels per day to 2 million barrels per day. So that's the projection. Of course, if we do not see those revenues come from crude oil, then we may not also, see the kind of expenditure that you are talking about. This is just a plan and not an actual spending in itself. So basically, it's just a plan to spend and then borrow. It depends on how much revenue you raise and then the gap. How much gap we have actually created that is meant to be covered. So this is just a projection.
Well, how do you see the government, they've talked about reducing debt servicing and reducing borrowing. How do you see the government cutting costs? Yes, we know that oil prices have reduced, falling, below the benchmark price that the government has set. How do you see the government funding the budget without borrowing? Is there any other means that the government can use to borrow at a lesser or cheaper rate, especially now that we're seeing these tariff hikes, going on in the US and other, Western countries?
It's an uphill task, especially if you've seen that the initial projection for 2025 budget was at 49 trillion. It's now been moved to 54 trillion. Of course, we know that external debts will be funding a major gap the majority of that gap. We need to be more productive, and we do not think this can be achieved within 12-month calendar period. We think that it's a long-term plan, to fund the infrastructure, invest in the people, and then block the infrastructure deficit that we have, so that we become more productive, especially with electricity and distribution networks for food. Because now it seems we're doing better with food security as prices of food have, marginally dropped. as we have gathered from the markets. Of course, petrol price is also marginally dropping. So productivity on the long run will help improve revenues and reduce debt stock and debt servicing in itself. But it's an uphill task. I don't think this will be achieved within 12 months calendar period.
Thank you so much, Bankole Odunseya, Chief Dealer Treasury at Polaris Banks, for sharing your perspective with us on Business Incorporated. So now let's look at other markets now in the Middle East. Its major stocks exchanges were closed except in the UAE. Let's see Dubai and Abu Dhabi. Mixed trading there, 0.98% down for Dubai. Abu Dhabi up marginally, 0.07%. Let's look at the other markets in Saudi and Qatar. They are closed Thursday, but they were closed also in mixed, territory, 0.18% for Saudi, and Qatar index down 0.14%. Let's check it in on the U.S. markets. Stock futures rebounded on Friday in pre-market trade after the S&P 500 entered correction territory. The Dow futures gained 0.42%, S&P 500 0.66%, while the Nasdaq gained 0.89%. Now, we see Wall Street sentiment has improved as government shutdown appeared less likely after Senate Minority Leader Chuck Schumer signaled support for a Republican funding bill. Now, despite this, the Nasdaq has fallen over 10% this year, and the Russell 2000 is nearing bear market levels. The Dow is on track for its worst week since June 2022, while the S&P 500 and Nasdaq face their fourth straight losing week. Investors now await consumer sentiment data and next week's Federal Reserve meeting, where rates are expected to hold steady. Let's check in on Asia markets now, where we see it's quite, mixed in that region. Look at mostly in Japan, we see it up 0.72% to close today's trading session. We see also the Kospi in South Korea down 0.28%, and the Hang Seng in China is up over 2%. That's a big one there. And the movers in that region, we see top performing stock like BYD in mainland China surging 0.6%. Now we see also Indian markets were also closed. They're closed for a public holiday, so we don't have that numbers, but they were closed in the red for yesterday's trading. So that's what we have for Asia markets, Ini, and also hoping that the markets for next week, kind of react, positively as we see the U.S. markets rebounding, from that bloody uncertainty they had. It's more like, okay,
yeah, well, I'm not sure that we haven't heard the last of the 200% tariff threat, and perhaps even more.
Maybe it's a dream. A dream.
So we'll see what happens over the weekend, and that, of course, markets will react to by Monday.
And I hope the EU doesn't come with a retaliatory of 500%, and then it goes on and on. And
if it's America first, then it's your country first. So
definitely, and you did mention with Olu, Nigeria first. Let's see how that plays out.
All right, Will. Thank you so much.